Hello everyone, my name is Danny. Today video I'm going to talking about the two powerful indicator. With those one potentially could identify the top and the bottom of the market. Before I start, if they add a value to you, please smash the like button and let's get started. First, we're gonna go in for the indicator and oscillator and apply the momentum. Just write it on MOM or momentum on the oscillator and indicator. Before that, I've got to quickly describe what the oscillator is, what the indicator is. Oscillator is coming under the chart, on the kind of the here, like a RSI, like a momentum, like a MACD. But indicator is applied on the chart, like a moving averages, like a Ichimoku, like a VWAP. Those one is indicator, and like a momentum and RSI, that is on of the oscillator. First we're gonna go in for the momentum and apply the change the length to the 14 because I'm gonna go in for the higher number, and the higher number they show us less noise on the market. We're gonna go in for the apply. I just change the color to the white and apply. This is unbanded oscillator. The number could be going any number, depend on your asset, depend on the time frame. It could be going any number. As you can see, we don't have a limit on the number for it, but normally depend on the asset that you trade with. It between the some range. For example, before the Bitcoin on the 4 hours time frame, between the like a 400 minus 400 to 400. Momentum, we can get the information from the momentum. We identify the area that is mostly ranging on the market. Why you use this one? I'm gonna go into and show you how to like identify those one. We're gonna go in for the, for example, I'm gonna go in for the 8 hours time frame on the Bitcoin and identify the market ranging on those number mostly. Gonna go in for the grab the rectangle tools and drag it around the area that is mostly market is ranging between those one. They give us the some number. I'm gonna go in for going for the more extension, and because as much as you get a big number, for you can identify the better for ranging on this area. This is band, and should be okay for us for now. We're gonna grab this one a little bit lower to put it on the high market ranging. That's it, pretty good for us for now. It's good for us for now. ROC or momentum, exactly pretty much same, but has a different calculation. I'll put it momentum based on the close the candle. I'll put it at the source of the close. You can change it depending on your strategy going for the open, high and low, and But it's better to get a back test from that one, which one is more accurate for you. I'll put it on the close. It doesn't bother me because I'm not using indicator by own for open the trade. Apply on there and going for the next step. After drag the word rectangle around the, identify the area of the ranging on the momentum. We're gonna go in for find it out the area that is break above and the break below the rectangle. I'm gonna go in for the little bit big. This area for us, it's really important because we are break below the rectangle on the ranging on the market. And this area is pretty safe, but we need to get into the trade. We need to get into the candles and the price action to find it out that is fake break like here or is a real break. I'm gonna go in for the chart and we're gonna go in. When we have a big movement on the momentum, that is pretty much we didn't see that before, right? That is show us the potentially bottom based on the price action. Potentially we get a confirmation, not confirmation, we're gonna get a kind of the potentially reversal pattern. And we're gonna be more study about this one to get into the trade. Now I'm gonna describe it for you. What's sort of the information that we're gonna get it against those one. We're gonna get it like a sort of this one. Now we're gonna go in for the chart, and I just want to make it a little bit bigger. And as you can see here, as much as the market is ranging under this area, we have a big breakout above this one, but we don't know what we're gonna get, what's the next level, because we're not predict the market. We have one strategy. We need to obey our strategy and the position, open the position. And based on the risk management, I highly recommend you to go in to see the risk management video in my description. I'll leave a link in the description. As you can see here, the momentum break above this area of the ranging. That is show us the something. Potentially we have a big movement. This is big movement for us because we have a big movement under this area. And now how can I identify this one? We can see that we're gonna come back to the price action. We need to identify the key level of the resistance based on the price action. And this area for us, they get a confirmation from the market to get into the trade. If the break above this one and the break above the resistance area, we put it potentially we can open the trade. But if the not break above this one and the break above this one, still we can get it confirmation. We can get a good trade setup as well, but this is give us the good confirmation. Momentum, they show us another thing as well. As I said to you, potentially the reversal when the market, when they're ranging after this one pretty much hiking, and we have a make a really top. If you can see that here, the ranging on the momentum between the plus 1000 or up plus minus 900, right? But we make it like it on the momentum, we make it 3700. That is, they tell us the something. They tell us potentially reversal is happen on the around this area after get a confirmation. This is not good example for it, but if you're going for the lower time frame and going for the 30-minute time frame, because normally I'm not really happy to show the like make a decision based on the before and tell you this is happened, this is happened, this is happened, because that is completely wrong. Because we need to learn in the future, in the now on the future, not based on the past is happened for the market, and get a confirm. Oh yeah, that is because us. This one is happened here. When it's happened. You miss out. We need to trade in the future. We need to have it set up in the future. If you're going for the lower time frame, this is get a confirmation from this area, because this is break above this one as well. But if on the lower time frame, if you want to trade on the lower time frame, you need to make it on that range again. If the break, because this one is shows the last 14 candles, but we not use it as a different time frame. We need to adjust our level for the different time frame. And this is good confirmation for us. You know, as you can see here, market is pumping, and the break above the resistance as well. That is kind of the good example for us to open the position here, because next resistance for us is around this area. We're gonna go open the position under this area, because this is break above it, and we break above the resistance as well. This is, and we're gonna go in for the lower low. That is really simple to identify for me in indicator and oscillator. It's just for the confirmation of the trade, not based on the one indicator you're gonna be do the magic. Unfortunately, on this business, a lot of people take advantage of the newbie in this business, and they sell a lot of indicator to them, and mostly indicator based on the moving averages, based on the momentum, based on the RSI. Those one is mix it together and make it one indicator and sell it to you. And because they sell it this one to you, they make a lot of good business under this one. But if you learn how to use one indicator and one oscillator correctly based on the price action, you don't need to buy anything. Because I had the experience on buying something, I don't want to call the name because of the YouTube, but when I bought it, that is exactly tell me the same thing that is RSI or moving averages said to me. It's completely wrong. And if you trade based on the indicator, you blow your account's balance. And it's completely wrong to based on the one indicator make a decision. We need to understand the sentiment of the market and understand the price action, because if you don't understand the price action, as much as it was one indicator is good, still we can't use it because indicator is not magic. The last thing that I'm gonna tell you on the that is potentially reversal pattern, I'm gonna tell you about the divergence. What's the divergence is? First, I know all of the people know about this one, but I'll just quickly, when the price make a higher high on the market, but we have a lower low on the our oscillator or indicator. That is when the price make a higher high on this area. Just quickly change the color. When the price is make a higher high, but oscillator make a lower low. That is potentially we potentially is reversal is happen for the market. Exactly for the downtrend is same. When the price is make a lower low, but oscillator make a higher high. That is potentially reversal pattern on the market. As you can see here, market make a lower low, momentum or any oscillator that is shows the divergence make a higher high. That is for the uptrend. I'm gonna go in for the one more step ahead and show you what's those one is. Just quickly delete those one. We're gonna go in for the lower time frame and show you what's this one is. As you can see here, market make a lower low. Market make a lower low. But on the oscillator, this momentum, they show us the higher high. That is potentially market is reversal. As much as we make a higher high, we make a lower low on the market. On the indicator, we make a higher high on the market. We just quickly change the color of those one is more obvious. Change to the red. That is potentially reversal is happen for the market. That is most important thing that you can use it for the momentum as well. It's really good indicator, but I prefer for the divergence use a VMC, Woman to cipher B for the divergence, or RSI compared with the momentum and ROC. We're gonna go in for the ROC on the next step. Exactly same, but a little bit different, but exactly same as momentum. If you learn the one of them, you don't need to learn another one. And apply one of them, you don't need to learn another one. Apply another one on the chart too. That is just quickly show you the divergence on the market. For example, this one, another example for the divergence here too. We make a higher high on the price, but on the momentum we have a divergence on here. Potentially market is reversal. That is shows another divergence for that. As you can see here, market make a higher high, but we have a dump on the market. And momentum exactly give us the good confirmation for the trade too. We lost the one key area. We break below this one too. Break below this one as well. That is good confirmation for us, but it's still too late because it's you know, most of the indicator and oscillator has a delay to give us the good confirmation, but I still can use them on the if you have a good confirmation from them. That is big problem of the indicator and oscillator. They give us the sometimes they give us the really late. You need to go in for the multi-time frame. What's the multi-time frame? You need to check the below the time frame down and time frame up. If you open the position based on the 15-minute time frame, you need to check the 4 time frame above and the 1 time frame below 2. Open the position on 15 minute, but you need to check the maybe 5-minute or 7-minute time frame, or maybe 4 hours or daily time frame as well for the other time frame to find the trend line. And that is completely different. I don't want to open this situation, this topic in here, but I just want to use them, introduce the momentum and ROC for you only. We're gonna go in for another indicator that is called the ROC. Exactly same behavior, exactly same, but different number, different calculation. I'm gonna put it on the 14-minute time frame and change the color to the red. Just one more thing that I'm gonna mention it. A lot of people has a RSI, MACD on the chart, on the one thing, on the on the chart, but all of those one is exactly same thing that is show us. We use it as a divergent, we use it as a powerful of the trend. That is completely wrong. You need to have only one oscillator, because most of the oscillator is pretty much same, like a RSI, MACD, ROC, momentum, all of them is same. You need to use them in the proper way. I'm gonna go in for the last part, ROC. Exactly same as momentum. We're gonna drag the rectangle around the ranging area, and when they break above this area, potentially we're gonna be uptrend. As you can see here, break above this one, but we have one area of the support as well here, a resistance as well here. If you break above this one, we're gonna be open the position as well. Exactly same as behavior of the momentum indicator, oscillator, sorry. We identify the ranging area. When they break above this area, depend on your time frame that you're using it. If they break above this area, we're gonna be reversal. We're gonna be going for the above or below this one. I hope so this video helpful for you. I'm highly recommended to, if you don't know how to trade, don't trade, because the indicator is not magic. You can't use the indicator for the trading only. You need to find it out the price action. You need to find it out the sentiment of the market. And if that added value to you, please smash the like button and subscribe to my channel. I have a Discord channel. I'll share some of my stuff over there too. If you like, you can follow my Discord channel as well. And see you next time, guys.